The Indian GDP in Q1 of FY22 grew at 20.1%. The numbers came out yesterday. The high number of growth year on year is largely attributed to the lower base of Q1 FY21. Now mind you, in Q1 FY21, India faced the first COVID wave and rigorous lockdowns, which had led to a huge amount of degrowth. The degrowth numbers stood at roughly 24%. However, let's not forget that Q1 of FY22 also saw the second wave of COVID, and despite that, the economy has grown around 20%. Let's take a quick extrapolation of the numbers. So, if I peg the number for Q1 of FY22 versus the number for Q1 of FY20, there is a degrowth of roughly 10% despite the second wave of COVID. That is quite encouraging in a certain sense. Another encouraging sign is that agriculture as a sector has grown well during Q1 of FY21 as well as Q1 of FY22. So agriculture has not seen a lower base in Q1 of FY21. Agriculture grew around 3% in Q1 of FY21 and has now grown roughly 4.5% in the current quarter, which is indeed extremely encouraging. Also, let's take a stock of the house views on the numbers that have come out, and also let's analyze whether houses have changed their growth projections going forward. So, Credit Suisse and Mr. Neelkanth Mishra has definitely indicated that most high frequency indicators have been strong starting Q2 of this financial year. The recovery post the second wave has been faster than expected, says Credit Suisse. They have hence upgraded their GDP growth expectations for FY23 by 5 percentage points. Nomura, on the other hand, believes that the second wave has really dented domestic demand, but also believes that the rebound is well underway. So the House lowered their FY22 GDP expectations from 10.4% to 9.2%, but expects normalization both on the policy as well as on the growth front going forward. Moving over to JP Morgan. JP Morgan believes that the Q1 pothole was larger than they had anticipated. However, the second wave has receded faster than they had expected as well. So they expect a bigger bounce of a more depressed base in Q2, and hence they expect the FY22 GDP forecast at 8.4% versus a 9%. The economy has clearly grown in percentage terms. However, when we peg it versus the FY20 numbers, it has not grown as much. So there is a bit of disappointment with regard to future expectations by brokerage houses. But if the economy has indeed bounced back as well as people describe it to be in Q2, there will be a reshuffle in those expectations as well going forward. So one must have a keen eye on what exactly is going to be the GDP numbers like going forward.